Good evening. This is the Elliott Wave update for the NASDAQ 100 and the S&P 500 for Thursday, February the 22nd, 2024. And to say that again, that it isn't interesting or it is not amazing would be an understatement and not telling the truth. The markets continue to be a little bit more on the surprising side. And what I'm referring to is today, although expecting the market to continue to rally on the back of NVIDIA's earnings, I was not expecting to see the Dow up 450, to see the NASDAQ up over 500 at one point, to see the S&P up over 100 points at one point and breaking above 5,100. The NASDAQ clearing 18,000. And actually, at one point, I felt it was an easy trot, just right back up to 18,100. So it was a very impressive day, with most of the components having a very impressive day in terms of buyers moving back into the market. Now, I am going to stick to a technical picture here. And what I've done as I've gone back, I'm right here on the forward chart, I'm starting in the NASDAQ. I began to have a little bit of a doubt with the triangle pattern, the diagonal triangle pattern that I felt was forming in both the NASDAQ and in the S&P. And so I went back and I started to read up on what are the quote unquote rules that guide us into how these should form and what is acceptable or what is not acceptable. And basically, a ending triangle, a diagonal, can be expanding or contracting. So I was continuing to look for the contracting, or to basically stay within some parameters and the boundaries of the triangle pattern. And that is not necessarily a rule breaker if it doesn't. What the rules do state, and these are generalized rules by others besides RN Elliott or Elliott Wave International, is that the diagonal, ending diagonal, will of course count out as 5 waves. And each one of those waves will be an ABC structure. Waves 1, 3, and 5 will be a 5-3-5. So in other words, a zigzag. They'll form zigzags, with 2 and 4 being more of either a flat or a zigzag. And that wave 2 cannot go beyond the starting point of wave 1. Wave 3 is always going to break the high of wave 1. Wave 4 often will overlap with wave 1. Wave 5 would be expected to exceed the ending point of wave 3. And so all of that is in place right now. But the major one that kind of made me shift the count or the labeling a little bit here in the NASDAQ was that wave 3 cannot be the shortest wave, either in a contracting or an expanding diagonal triangle, and an ending diagonal triangle. Cannot be the shortest wave. And that kind of has nagged me for a long time, because when you get the rules and you've put them into your mind and have done Elliott as long as I've been doing Elliott and following Elliott, it just kept ringing out. It kept ringing out. Wave 3 basically can never be the shortest wave out of waves 1, 3, and 5. Can never be the shortest wave. These are impulse waves. Most often, wave 3 is the longest and the strongest, but what it cannot be is the shortest out of 1, 3, and 5. So as long as that is going to be greater than wave 1, then wave 5 can be greater than wave 3. Wave 3 just cannot be the shortest wave. And it usually will then, of course, be greater or larger than wave 1. And the way that I'd count this originally, having it all threes, was that wave 1 was here. And I have switched that around and brought wave 1 back down. Now, I will tell you that even in this case, it is A, B, C. And it does break down into zigzag. So it's a three-wave, wave 1, three-wave, wave 2, three waves, wave 3, and it's a zigzag. This, you're going to argue with this one, but it does count out as 5, and this certainly counts out as 5. So that's a zigzag. Here we have another. Now, this is where a lot of people got stuck, because wave 4, if this was wave 1, overlapped it by a great deal. Now, by putting wave down here, it keeps it in a clean 4, not overlapping wave 1, but it did go deeper than what was expected. And so it broke below what would have been the existing channel line for the triangle. So, or for the diagonal. That's when I went back and said, expanding does work. So I put back my parameters here for the diagonal, and then saw, where does this cross over my fibs? And not that that's going to be the tall tale sign of where this thing's going to go, but on both the S&P and here in the NASDAQ, the crossover, or where it would likely be met, is here at the 1.618, where minute wave 5 would be equal to 1.618 of minute wave 1. So today, actually, we can see that, I wanted to take this out, that minute wave 5 has reached equality today, just about. The high today was 18,087. The 100% marker is at 18,095. So it fits pretty cleanly. I'm just going to take that one out because it doesn't matter anymore. So, but remember, now this actually does count as 5. So we can say wave A. And truly from here, we likely should get a B wave, which looks like it maybe did begin coming into the close. And then after the close, they were selling, and, the market was kind of just heading lower. So I'm kind of thinking, okay, maybe that was the A, we get a B. All right, so let's fill in some of those blanks as to what maybe we can expect. First thing we can expect is an additional, we're going to get a correction, right? An internal, inside this wave, correction, but there's still one additional leg up, and it's going to be 5 waves. It's going to be the whole pattern for wave 5 will be a zigzag. So a zigzag is a 5, 3, 5. And that again puts us up into this cluster, which I've continued to discuss. Now, what I did revise are the particulars for the minute wave 5 as it relates to minute wave 1. First of all, I moved wave 1 down here, and then again making wave 3 the longest. So all of the basics are remaining the same here in the NASDAQ, and that it is a diagonal triangle. I've relabeled it, not to make it fit, but to make it correct. And because it still does seem to be forming an ending diagonal triangle. So, and it can be expanding. That was the big thing. I had to go back and I had to research it to see. I knew that I had read it somewhere, I had found it somewhere, that they can be expanding triangles. And here we are. So with that in mind, let me bring this down to the hourly chart. And we're going to take a look at this. It was an incredible move. Now, partially, I want to just say, partially, what starts to happen is, again, when we're getting into, yes, we had all of these different points because we've been there before, but there weren't any that really that the market could hang its hat on, and that once it was broken, they just kind of went. They just kind of went. And that was more evident in the S&P. And I'll get to that in just a moment. But here as well, that we tend to, right when it broke 18,026, which was this high here, it is just open ground until it gets to 18,121, which is the high of wave 3. And sure enough, it just kind of went. And when I was thinking, okay, 26, that's going to be a good place. Maybe we'll get a little pullback from there. No, I mean, it was very, very small. And then it just started to go. And then, okay, maybe it'll come off of 42, 45. No, it did just a little bit, hung out up there. And it kept climbing and climbing. And of course, did eventually turn once it had gotten close to that fib at 95. So the market remains, at least today, was extremely strong. We saw, again, to try to explain what this sudden turn, I granted on the earnings, but across the board, what we saw Microsoft up 10, Meta up almost 20. We saw Apple up 2, AMAC gaining ground, AMD following NVIDIA strong and getting pumped back up. Amazon, because it's becoming a part of the Dow, we're seeing how they got to buy it because they're taking out Walmart and adding Amazon. So if you happen to have a portfolio that is of the Dow 30, well, then you've got to make the changes that are being made to the index. And so that continues, I believe, to experience in that, but also had a strong showing today. So I am going to continue to look for this wave 5 to continue, but first, let's just measure this out. If we have indeed completed this level, and this is going to be, the A wave, or because we've done 1, 2, 3, 4, 5 coming up, and it's difficult. It is difficult, but I will break this down and see, if you can see. So we have this basically 1, 2, and then we get going, and it's a 1, 2, 3, 4, 1, 2, 3. This might be 4. We might have one more high, and then we should start to get a pullback. If not, then it is done here. It's because there was so much movement sometimes within that 30-minute window, particularly here on yesterday on the earnings. It just becomes more difficult. And so, not that I like making an assumption, but it's just the nature of the move. And I can likely, even if I took it out of the candle and just put it down on the line chart, you can kind of see how it gets like maybe 1, 2, and then we got a 1, 2, 1, 2, 1, 2, and that's a 3, and then that's a 4, and a 1, 2. And this kind of ends up being, that could be the 3, the 4, and this is a 5. Now, granted, it may need one more, like I just said, even here kind of shows. We might need one more new high above 87 before we get that a little bit larger. So we get, this is the zig, and we're going to get the in-between ABC, and then we'll get the zag to finish this larger pattern. So I am going to flip this back over, but I'm going to go under the assumption that either we're close or we're very close. So let's just take a look at what our fibs are going to look like if we come back and we start to pull back. So we're looking for the, again, if we're doing an ABC, then we're looking for the B wave, basically. So let's just kind of take a look and go up and put up our fibs. So most of the time, if you're looking for B wave, it's going to come about 50% of the whole move, not of one individual bar, but of the entire move. And that brings us back to 17,730, we're going to say. But we start to have support at 17,918, 17,814, 17,729. And then sometimes if it's going to come all the way back, and again, zigzag. So it's not going to, I do not expect it to come all the way down and then rally all the way back up. That is part of the of what we're discussing today in terms of what we look for within this expanding triangle or within this diagonal, is that waves 1, 3, and 5 are ABC, right? So they're three waves, but zigzag. They form zigzags, not flats. So I'd be looking for this to come down 382, 50%, and then turn and give us another rally. And then we'll be able to measure that on a fib basis, and then hopefully really start to pull in the pull in the end of this move. So in other words, are we going to, so again, we're looking at where things cross. And right now they continue to, first of all, they cross here, but we're over here. So we get here and then here. You can still see if we come back over, we're still right there at 18,542. And maybe depending on how long it takes us, we get an overthrow. And it still gets up even a little bit higher, gets above it and a little bit of an overthrow. Now that you can expect. Because first of all, something is going to have to continue to bolster whatever's going on in the stocks to get this up there. That's, to me, it just doesn't necessarily go, oh, okay, well, this has all been bullish, this is great, because a lot of that is changing. So, and it may happen fast. I will say that as well. But I would think that sometime in March, actually, and probably before the Fed meeting, which will be in March. So again, if we have a little bit more to do, then I would be looking for adjusting the fibs for the retracement accordingly, and then get it to start, and then look for that B wave coming down, and it'll come down in an ABC. B wave, once it's complete and the structure is complete, then be looking for this thing to start up again. And right now, resistance continues to be at 18,250, which is the primary B. And then the 1.618 is for minor wave 5. So that's 18,370, 371. And then we have minute wave 5, 1.618, at 18,542. And that seems to be where this all kind of comes to a conclusion. All right, moving averages, finally, they're going back in line now. So I don't suspect that, that didn't take them very long and just all kind of went, whoop, we're not going to go down, we're going up. All right, let's go take a look at the S&P. Now, the S&P as well. I switched it around just a little bit, and you can see here as well that we have, it is a little bit of an expanding rather than a contracting. And that is acceptable. Now here as well, and go up and see where is the crossover, same level. In fact, what we have now going on is that minor wave 5, 1.618 of minor wave 1 is at pretty much the exact same level as where minute wave 5 would be 1.618 of minute wave 1. They're at the same level. And I want you to just look at where this trend line kind of comes in and intersects. 5,175. So, and we're right in the middle of both of these. So, and the S&P are like, wow, okay. I'm not going to say that, okay, everything's building up and pushing right to there. Because again, what we're looking for, and now we can see here, this was ABC. This was an ABC. This was an ABC. It is the longest right now. Wave 1's the shortest, so it's not the shortest wave. We had a running correction for the fourth wave because it didn't come down and take that out. I mean, in the body of the candle, it did. Body of the candle definitely did, just by a little bit, not by a whole lot, by a little bit, but the wick of the candle did not against this wick. But still, it was a 4, and this was turning into a 5. And that was my mistake yesterday, by the way, that I was a little bit tired and I just went real quick and I looked at it and I thought, yeah, okay, it's a 1 up, 2 down. And, we're off to the races from here. Now, so I switched it back, and actually it was my colleague, that's come on and is doing this together with me in the trade room, Sasha, who said, no, it actually is 5 down, and it didn't make a new low, but it was a running correction, and so I'm going to accept that, and then I connect my bottom trend line to it there. So a little bit of it expanding, but what I really liked once working it out and figuring that how I going to work the internals, and then re-adding the 5th wave, minute 5, as it relates to minute 1, and how that picture perfect to minor 5, and then again the intersection of that triangle. I was like, okay, so this as well, I think, could be wave A of 5. We're going to do wave B of 5, and then we'll do C. Now here, even more difficult. Again, once we broke 5,066, you see, it had no bearings to how high they should push. Where can we stick this thing, except this next level of resistance at 51.16? I mean, there was a little bit of a pause, right? It traded and hung out and traded and hung out right around just below 5,100. But then it finally broke. And when it did, it got itself all the way up to what, 7? Let me just see. Yeah, almost 8. And that was it for today. Now, did this actually kind of come in, and does it look like it's going to be 5-wave structure? I would think very much like maybe the same thing. We need one slight additional high and then pull back, right? If I had to say 1, 2, 3, 4, 5. Remember zigzag, which is going to be a 5, 3, 5. But if I'm going to add those fibs now based on today's high, we can get a little bit of an estimation on where we can find our support for this B wave. And it's B of minute wave 5. So we're looking at, we have 2 3/6s at 5,072. I'm looking for 382 to 50% on this one. And that would be 5,050, 51, and down as low as 5,033, maybe 30. 618 would still be acceptable, but we're starting to get a little bit too deep, right? Being that it's an ABC down and then we're expecting another zigzag up. It doesn't mean that it can't, but I'm not looking for a flat. A flat's pretty much what starts coming below 49.90. Then we're working into a flat. And I'm not looking for that within the confines of what should happen in an expanding triangle. Okay, so this is how I'm going to leave it. Our moving averages here as well. Everything seems to be just right back on track. And I have to figure out where is my, they're there somewhere. Oh, there it is. There's the 200. There's the 50. 50 is getting ready to cross back above the 200, which remains flat. After this strength, after all of this strength, you did not get much out of that 200. But what did go is the 20, the 8, and the 4. And the 4 is now cushioning right underneath this, giving it support. And they basically, the 8 is the one that basically walked this whole thing all the way up, along with the 20. 20 never came into, never got challenged at all today. And so I would expect it to get challenged once we start to pull back in that internal B wave. All right, this is where we're going to complete it. Now for tomorrow, there are no numbers. There's nothing. there's nothing tomorrow. Let me just double check to make sure I'm not gonna make a fool of myself here. But we don't have anything. Nothing is scheduled for tomorrow, Friday, February the 23rd. So any earnings reports will come out before the market opens. There's nothing after the market. And my expectation would be that we could have what many would consider an inside day or a day of consolidation and just kind of moving sideways as we work through this ABC down, because I would suspect that we might get that additional high during Globex, unless Globex comes back on like it did when Europe opened overnight, and they just took it and they didn't stop. And it just, by the time we got in today, by the time I sat down at my computer and opened up my screens, it's like the NASDAQ was already up over 300 points. I'm like, well, that's not very much fun. Ended up over 500, but when the bulk of it was done before we even had a chance to pull the trigger on anything, it makes it a little bit more difficult. There was still plenty to do, I have to say. As far as trading, I tend to not participate as much as I used to, I'll say. But that's just me right now at this stage. But there was plenty of opportunity, and I know other people that I trade with had some seriously good days. So it just depends on how, for day trading, how focused you want to be and getting in and playing each one correctly. So because inside of these bars there were great moves in both directions, actually. All right, this is where I'm going to finish it for today. I don't want to go on too long. So again, everything still remains in place. It looks like we finished that 4 and within the triangle, and now we're starting on that 5th wave, which again, I continue to feel is our finishing move. So the larger picture for me remains the same. I will be updating that. Both, by the way, still are active, and that would be the alternate count that Sasha presented last Saturday. I'll be checking with him to see if you can come in and present again this Saturday together with me. And also the preferred count that I continue to use, which suggests that we're getting close to finishing a primary B wave. One way or the other, I think we're very close to finding that completion point. Now, whether the market actually goes, particularly here in the S&P, to 53 to 5,500, it's still going to end in the same result's going to end. It's going to be a stronger decline. Whether we finish this at 5,180 or 178, whatever those top lines were, and start the decline there, or we go up another 100, 200 points from there before beginning that decline. So it's still pointing to the same direction. So again, we are, I believe, no matter which count you want to use, are within the final stages of it. All right. I want to wish everybody a great trading day tomorrow and also a great weekend. Do look for the update, the podcast on Saturday. And depending on what happened on Sunday when Globex reopened, I likely would make an update if it was something really strange. If not, then the next update will be the Elliott wave update on Monday, 26th of February. And look for the podcast over the weekend.